All right, all right, all right. Thursday, folks. Thursday. Let's get it. Big shout out. Let's start it. Everybody in the chat, great to see you. Welcome, welcome. I'm going to say it. I really don't care, but hit the like button. Subscribe if you want more harmonic pattern information. We're here 3 days a week, Monday, Tuesday, and Thursday, 11:30-ish or so. Grab a sandwich, join us for lunch, an early lunch. Today, we've got the one, the only Mitch Ray TA. Mitch, go get with Mitch Ray TA at his Twitter handle. Probably the best place to start, and then get on his YouTube feed, his Patreon, his membership. Get with Mitch. He does his nightly show, what I consider the best technical analysis program on the web, 6-7 days a week. Where are you, Mitch? I had tagged you in a second ago. Let me give you guys his profile. It's at Mitch Ray TA. Can someone pop in his Twitter handle, please, in the chat? Miss Stephanie, please. Oh no, they probably took away my... What, am I frozen? What happened to my tweets? Whoa, are my tweets gone? Miss Stephanie, you have a couple things to check out, please. Did Twitter do something to me?
Sorry. Hey. Can you hear me?
Hold on. Hold on 1 second.
Scott.
Hold on.
I'm confused. Can you hear me?
Yeah, hold on, Mitch. 1 second, okay?
Alright, sweet.
Yep. All right, so Mitch is going to come in about 2 minutes here. I'm just checking everything. Seriously, someone take a look at my Twitter.
Can Dez do something?
Yeah, I don't know. Well, let's get you in here right now. Mitch Ray, TA.
Yo,
What's happening? Go to YouTube, Mitch Ray, TA. He's got tons of subscribers. He's got the best TA show on YouTube, bar none. So get with him nightly. You're on at like 6 p.m. Eastern.
yeah, 6 p.m. Man, really nice words to say. Super humbling from someone so esteemed like yourself. I mean, a published author and researcher of this field. That's amazing, man. And anytime I get a chance to push you, I do. For good reasons. And it's always a freaking fun time coming on stream with you because it's like we're not even streaming, we're just talking. You know, like we were in Miami or whatever. So, yeah, I'm a little disappointed in the price action we've received, but um, it was never gonna be something that was out of the cards until we broke above $44,444. Um, the previous high from January 13th.
Here it is.
So
The chart of Bitcoin is what Mitch is referencing with today's rollover. And I think I know you were all over this, and we
quiet. They're saying my mic's low or something.
I don't know.
I just moved closer. I don't know if it's better now.
Yeah, you sound good. Let me check levels here. Yeah, I think everything's good. You can give me a shout out here. Your levels look good. My levels look good. Can boost them.
Yeah, I think.
Yeah,
I
you're
don't know.
you might.
Normally, right now, I have your stream up on one of my screens in my top left, and so like it makes me turn away from my microphone. So
Ah,
anyway,
all good.
I think we're okay now. Um, they keep saying I'm really low, so I'm just paying attention to what they're saying in real time.
You're hearing Mitch is not on the stream. You're hearing him through my microphone. Hmm.
Oh, I should be on desktop audio.
You should be on the desktop audio for sure. Hold on one second. Oh, you know what I did? Dummy. Let's go again. That's the problem. Say something, Mitch.
Hello?
Here we go.
Hello, everyone. Can we get hypes in the chat if I sound better or still quiet?
No, he's there. Give us a shout.
Oh, yeah, no sound. Volume, please. No,
Hmm.
not good. Good.
What's going
I have to make
on?
mine sound. I have to make mine sound clips now.
Better. Here we go. Way
Are we
better.
good? Hypes in
Scott.
the chat if good.
Yeah. Yep. Yep. Scott's a little loud.
I think we're getting the hypes.
Awesome. Thanks, everybody. Looking good. Looking good. Yeah, I
All
had
right, awesome.
actually I turned that down. I faded in the music for the intro, as we would
Yeah,
say,
it's all good. It happens, and it's
radio.
hard to
Well,
know what's going on when you're live too. It's the hardest part about live streaming is the improv and things go wrong and stuff. But yeah, just really disappointed in Bitcoin because if you were able to break 44,444 and confirm it, then your midterm uptrend is confirmed. But since you didn't, you were unable to break it, and all you did was now make a lower high than your previous local high and the same high as the high from the previous high from the downtrend, you are still confirmed in a midterm downtrend. Until that level's broken, it's going to stay the same, unfortunately. And I don't really like confirmation highs, but I do like the fact that we have a critical support we're sitting at. But it's just probably not going to help when futures roll over like they started to, like the Nasdaq and the S&P 500. Have rallied a little bit off their session lows at 44.05, but just yep.
this is where time becomes a real pressure on the trend. And the thing that I've been noticing, and we've been noticing actually for crypto for a while, is the inability to really get off of whatever the prior low was. And then what we tend to see, or we continue to see, is this stretched out consolidation. you get a nice thrust, maybe you develop some construction off the low. But what happens is that there's no follow through. You hit your key numbers and you do, I like to call harmonic pause, and you go sideways and then, do the count, do the 30 bar count, I like to say, where after you hit your levels, there has to be a time limit, general time limit. You can use other ways to look at it, but even a general 30 bar window after the fact should really kind of key us in on what's going on. This is not this current bat pattern, which is pretty much the same across the board. Ethereum, total crypto, is a continuation within this bearish trend, and now
Yeah.
we're 50 bars in. Then we're clearly gonna have to take more time, consolidation, where you reach for minimum targets, minimum structures. I think even if we were forget everything. I mean, let's just connect dots and say, where's the next possible pattern off of this consolidation? Well, there's X, A to B. There's C, so B's at a 0.44. Maybe a bat pattern that gives us a swing 886 at 37. Um,
Yeah, and that'd just be adequate fib levels, right? Moderate retrace from your lowest low to the high. I mean, you said 37, that equals like a 618, and then the 786 is 35.7. But really, I don't think you can bet on anything between 30 and 40K. I mean, right? There's just such little support resistance developed between that level, such low volume between that level. Like the order book is so thin between 30K and 40K, where all the orders are at between 40, 42K and 30 and 31K. So that's why I would just like really like for Bitcoin to not fall below $40,665 ever, because that just to me is, I mean, what's the point of breaking it and back testing it if you're just going to fall back below it and kind of confirm like you did December 7th and what you did December 24th twice? I mean, that could be just what you're doing again almost, where you from January 13th to now. It's just we need, that's why it's so important to recapture your previous discernible highs of the trend you've been in. And that was 44,444. So
yeah,
and Ethereum's the really really disappointing one, where it's okay. I mean, really, like you could look at this like an inverse head and shoulders potentially that has not broken its neckline, so it's not a real pattern. But I mean, this thing is okay kind of until it breaks below 2850, 2900. But the issue with Ethereum is it's such a perfect Type 2 return, lower high distribution on the Type 2, that it's just really like it's a you look at Ethereum's chart or just on the 4 hour or something, and sure it made a higher low kind of, and but it's only made lower highs. It has not made one higher high really yet. So that's what I'm saying. The midterm downtrend is still very intact. I mean, for Ethereum, it was not even close. Ethereum had to break 3417, and it didn't even test it, whereas Bitcoin at least up thrusted through it and back gave us the go F yourself, back test of upthrust, but Ethereum didn't even do that. So um, I liked Bitcoin better than Ethereum, just based on what it was doing to its highs, and it's just another lower high, man.
yeah. And this last, I'm showing some different time frames. This is an 8 hour, right there, and you see even on the longer term times, the time frames that trying to stabilize. This is something I've just been pointing out. Standard technical analysis, that the first process or first step to get out of a downtrend is to crack the primary downtrend, that the downtrend line, which this did. But that's early. That's always an early signal, and this is something that Wyckoff talked a lot about, was establishing that jump across the creek, the river, the stream, whatever you want to
Sure.
say, and then triggering that signal after the fact down here on the retest is a much better situation. So I agree, not a problem. I don't have too many problems with Bitcoin. I've been saying for a while. I think it's more an issue of time than price, where probably going to take a lot more time and give us something against these prior lows. We know that this 33,000 incredibly was the exact 886.
Yeah, crazy man. Just like can't even make these things up. It's so perfect
So what
to the dollar.
do these guys know about the 886? What
Of
do you
course they
think?
do. Well, I mean, it happens every cycle. Like go back to June and July. What happened? 886s. Lots of 886s everywhere. And it happened again and again and again. So on all markets, 886s. So I
It's
just, yes, of course, it's programmed at this point and all their algorithms and bots, and it's just come from traditional markets. It's not like it's a new thing, it's made up. It's like, no, they do it one way on old markets and they're just bringing it here and we're clearing the thicket, like we're the ones we know, like no research has really been done like you did with harmonics on the traditional markets, so we're the ones clearing the thicket, trying to, monitor this stuff every day. And yeah, the 886 over and over and over again. I mean, where did Ethereum reverse on February 10th at its own respective 886? I mean, Ethereum reversed it at 786 while Bitcoin reversed it at 886. So that's something to note. It never, what the 886 for Ethereum was like at a critical $2,000 support. It never touched it. So,
Yeah, that lack of structure also is that's kind of a signal. I mean, it's not a signal that you want. It's not an actionable signal, but the lack of evidence, the lack of anything concrete there, is a sign where if you find yourself reaching for situations like, is this a pattern or that a pattern, and it's not sticking out, then it's probably nothing. I mean, it's probably something that needs to be a lot clearer. And I still say that the major markets need to give us some kind of huge pattern like this bat pattern developed back in 2019. Even on a daily basis, I think of what's happening currently as, again, a time consideration where there might be reactions. There might be great trade setups, and I do think it's a tradable market, not a holdable market. But waiting
yeah,
for,
until we make our highs. Yeah. I mean, until there's like a trend reconfirmed, a midterm uptrend reconfirmed. Yeah, I agree. It's
that
hard to like be truly long, even though you can get some great entries maybe if you're lucky, you always want to be long and be able to sleep at night when you know your asset is making consecutive higher highs, higher lows, recapturing previous highs constantly, consistently. Yeah.
I mean, here's the thing with Ethereum. I think everyone can look at that as a standard impulsive critical trend low and should not be violated. Is this going to be another low that holds? Because you don't hold that prior low. You might come retest it, but if you break down, like Bitcoin, like a lot of them, I think that's the point where you do the full 886. Maybe it's just
Yeah.
we're pausing here. I'm not going to throw in the towel, but I will say this. Look, that's like a 56 something percent. Maybe we have, is that even a 382? Yeah, that was a 382 bounce off of that low. 382 came in at really 3,200. But underneath there, like all of them. I think Cardano, same way. You have these extremely defined, obvious levels of support that,
Mm-hmm. Yeah. And then there's nothing after them.
yeah, I mean, there's Cardano.
Like,
Bat,
what is Cardano doing, man? It's absorbing all of Hoskinson's demand is being absorbed, maybe.
and look at the volume. I mean, you mentioned that earlier, and that's treacherous. That's not volume that indicates a change in trend. As they always say,
Hmm.
volume precedes price. Well, that volume is super low. That's the kind of thing I'm seeing where I don't talk a lot about volume, but when it's noticeable like this, you have to respect.
And don't you think that the double top that was identified and confirmed kind of on January 18th, that's still valid until you recapture highs above those two highs? And what did you just do recently? I mean, you just made another lower high. So there is evidence on Cardano of more distribution, of like the most distribution you've seen of the entire correction that started in September, man. Gut wrenching. But hey, man, we're at a dollar again, so low risk areas, right?
Not when you measure it on the scale. I mean,
Not
that's,
when you're looking at the context. Yeah, it's just terrible. It's like, hey man, we're bottoming out at a dollar, and then you run up and you make a $1.26 peak. Your last peak was 163, and the peak before was the exact same. I mean, that's just shows there are less market participants majorly that own this asset than they did before,
I mean,
and now you're right back at support.
you're at some of your lowest volume levels. I don't know, a long time. I mean, you have to go back where? I mean, I can't even go back. You're at all time low volume levels. Let me see if we can find a lot more history here.
Sitting at support, I mean, that's not really.
Yeah.
I think hey man, it rallied to 126 and it's right back to where it was when it didn't look good before. And like now, I don't think the case is. I think the case might be a little stronger for bearishness, but again, it would require Bitcoin collapsing. It would require Bitcoin going like to 40K or lower. And that would be terrible for literally everything. The whole market would be wrecked. Everything. So it wouldn't just be Cardano, but we know where Cardano is most likely going. It's going down to like 38 cents minimum, probably. Just, I mean, I guess it's going to do what the Russell 2000 did, maybe 68.5 cents. That still doesn't matter which little low you go to. If it breaks a dollar, it is going to lose so much value and it's going to be so fast. It's going to be, yeah, headline day. But I just,
I
yeah.
think you're leaking already. I think you're showing signs that, if we're one of the things that's so powerful about the critical levels, an 886 level, a 618, or even a 382, is that the individual action at those levels is going to tell you a great deal about the predominant trend. I've talked a lot about how when we get into these huge spike moves and then you pull back more than your 382 level, well, once you're not, if you don't continue off a 382, traditionally, typically, yeah, you'll do a full 618 back. And, if you're in the move and you don't adjust stops, you're going to get drawn down. But time and time again, we've seen that 382 failure. I call it a 382 trailing stop, but there's certainly something to it. And then when you go to the 618 on Cardano, where at basically 120, that should be holding. And you tell me what's going on there. Failure, bearish engulfing, conti-
Yeah.
continuation lower.
Yeah,
And
like yeah, it's terrible.
so until,
Reaction with using quotations, at least at the 618 reaction, by the way.
yeah, yeah, in kind of 5 minute context only, but this is, it's tough to see because this stuff takes time, especially folks that are new to harmonic patterns or even just the simple measurements. This stuff requires time to play out. So this could be your first go around. This, for most people, it probably is, of riding a fantastic 314 uh, parabolic move back
Oh
down,
yeah, well, I mean,
full reset. I mean, full reset on Cardano gets you to 40 cents.
and unfortunately, like, I mean, unless you got in like in January or February, I guess, or I don't know. I mean, it had a run up that was pretty freaking good until the buying climax in August, unlike Bitcoin. But I don't know. Yeah, I think most people in crypto joined last year. Most of them did. Like that's a stat, and that came out from MicroStrategy itself. So yeah, a lot of people about to learn. I mean, if that bearish engulfing candle on the weekly that you see right there from January 17th that week, if that's still very valid. Until a Cardano gets a weekly candle high close above 141, you have a confirmed bearish engulfing candle that is still very active. So, and that and the so you're talking about going on a month now of price action after the bearish engulfing candle, and look at that. It couldn't even recapture the close of 112. That is pathetic price action.
Yeah.
Oh, disgusting. It's like a narrow range after an engulfing candle, which shows like what? Like the people who sold still have not come back into this asset. They still control that. I mean, in my opinion, that's the way I'm looking at the Japanese candle.
Yeah, I'll do one. Let's throw a little ratio on the singular candle itself, which is, a way to kind of look at the larger or even the weekly range. But if you do it this way, and this holds true for ABCDs too, but let's just measure that range and look where it went. The 50% of that candle, not even, and back down. We violate that A point. That's where then you easily go to a 1618 on that breakdown. That you usually see that if you can't muster an impulsive reaction after something so strong like that, and it's clear bearish engulfing leading to continuation, you can expect
Hmm.
a 1618, as a thrust move off of that. Again, even your short-term breakdown levels put you 70 cents, and at that point you're doing further technical damage to the
Yeah, you're
long-term
done then.
charts.
Like I don't even think fibs are even as relevant when you break below a dollar because there is no support looking left, right? And Fibonacci is always strongest when you have confluence with horizontal line support resistance. So, uh, yeah, it's just like below a dollar is death until literally if you're looking at the weekly till 38 cents, 40 cents, whatever, 39 cents, that's still not even okay. That's the real one. I mean, that goes to April 2018. But yeah, like I just think you might lose half your value very fast if you fall below a dollar.
You,
Just the way it's getting ready, it seems.
you could, and you think of it as an event. I think of it as like something where even if it bounced hard, it has to go down there to kind of end this downdraft disaster. Um, Now I'm popping up a chart of XRP, which is one of the few that I've been featuring where
It's
it
good. It's been good, but yeah.
has a beautiful pattern structure here. And it's a type 2. It has done the reaction, come back for the reversal. I would love to see more patterns
So
like this.
strong, man. My
Yeah,
God, look at the weekly on it. Oh no, Bitcoin's screwed. And then you look at XRP, it's like, oh, bullish and golden candle, then a continuation confirmation candle, and then this week indecision. It's at the same price it opened at the week at. That's incredible, man.
yeah. And that's, again, this is in the
Jeez.
spot where we want to see this kind of um, consolidation. I'm not surprised on the secondary retest. We're taking more time. But this is, I've been saying, this is kind of a really good sign if you're looking for good signs of
Hmm.
big cap crypto where there's your type 1 reaction up to target 1, target 2. Now we're back down to the XA level, super impulsive, but we're holding. So I'm keeping this on the board. I haven't been looking at this too much until recently, but what happens down here on XRP is as big as, say, Bitcoin or Ethereum, what those do to their respective levels. But at least there is a major pattern here, much like, and this is the comparison for it, much like when you go back to Bitcoin, all the way back here, 19 and 20, that before the major explosion. So for me, the takeaway is that we've got a pattern. Great. It did the type 1, type 2. This one did type 1 and then came back for type
Hmm.
2 before the launch, which is great. Um,
Yeah, you got the engulfing candle signal, and
yeah,
then you have yeah, let's see. You do have technically a weekly RSI hidden bullish divergence going on from the low from July to the low from January, late January. You have lower levels relative strength, so hidden divergence, and so the continuation, I guess, is playing out. But yeah, it's so nice. I mean, it's kind of like interesting, we're talking about XRP, but then you do look at the weekly on Bitcoin, and it's really not even that big a deal. It's kind of disappointing of a candle. but no damage has been done really.
Yeah,
So, I mean, and the hidden bullish divergence on the weekly is still there for Bitcoin.
look at the volume on Bitcoin too. I mean, this is crazy low volume. Um, Now I'm okay with that. I mean, here's let's just show it, and you've violated the uptrend. I just think we have jumped across the creek, as Wyckoff says. Now, come on back down and to the right of that downtrend line, and give me something here. Or if this is just going to be a static 886, I would be okay with a 33 retest and then go.
Oof. Man, you talk about the fear on this market, but it's normally when the reversals, the big ones happen, when the fear is extremely high and just everyone's capitulated
Like a
emotionally.
yeah, a 1 week candle, a 1 week flush out. I think
Oh
the
God.
volume is there. The volume's light enough that they could jump on this and push it down. But I don't think it would last long, and I think you have other things in play. I want to pop this up, like the whole thing on BTC futures. Let me pop that chart because this is also has relevant levels where it's here's the massive butterfly that started all of this. Then
Butterfly? Where's the butterfly?
I'm popping up a new screen. Hold on 1 second.
Okay.
Bring this up here. Butterfly was on the BTC futures that
Oh yeah.
was off of a secondary high. It was kind of tough because this thing we were looking for an all-time 1618,
Oh yeah.
and really what it ended up being off of this secondary peak lined up where B point was at a 786, and you had a really nice A B C D construction. So this is something that I think is new for a lot of people, that is something I haven't really defined, um, maybe as precisely as something that is a price range where you say, okay, look at the absolute high to low. But one of the things that I've really come to know in recent years, and I will say this, in I would say the last 5 years, that the alignments, the true alignments, if they come together, especially when you have your B point, and this is within our automated tolerance, that's within 3%, but depending where that sits with your other combinations, if they come together like a serial combination and line up, it is valid, and that is a valid structure where not only the most people are going to say, oh, double top at 65 or 68,000, but for harmonic levels, this butterfly is what I would say the true harmonic for maybe not off the exact range, but clearly respected it. And this is still type 1 reaction. Um, we've broken
Yeah.
it. And here's the thing, I just got another overbought signal at a very disappointing spot. Not We had a very little, small reaction off of that 886. Now on the daily, BTC hit two things: harmonic strength index there, and this is amplified RSI. That's my just think of it hypersensitive RSI, that will show the test or the extreme early. But the thing about it is, until this can come back down to oversold again, we have to assume more consolidation. And that's where, again, the whole aspect of lining up where we are and clearly saying, okay, it's rolled over. Let's be conservative and just say this is going to consolidate and take more time. Well, that's sideways to
And
down.
you know where we're going, right? We got to go fill that gap at $40,900 or $40,700, whatever. That's going to happen. Now it seems extremely likely after failing for all these days. I mean, your first day was February 7th to test 44,444, and then like almost every single day you've tested it, like including pretty much today, and now you use all that failure, and you're just staring at the gap,
Yeah,
and you're so close. I mean, if you close where you are right now at 42K on futures on the daily, it will be the lowest daily candle close since February 4th, which was the 5th was the gap up, or the 7th was the gap up day in the weekend. So, um, yeah, that's just upon you. And like, there's always the argument. You could always think about maybe 39,580 goes to get tested, which is the low from January 10th, which was like the potential left shoulder. You go down there, you fill the gap, you make a more symmetrical looking potential inverse head and shoulders. On the weekly, if you think about it, if you go to the weekly on just Bitcoin spot, you can see where the daily or the weekly candle closes are, and that's between 38.1 and 39K for the candle high close from January 4th and June 7th. So I mean, like, you could go down to these levels and probably be okay. I mean, if you stay at like $40,000, $40,600 is kind of like that's the daily candle high close back from January 8th of 2021. That is like everything. That is the clear line in the sand, where the order book gets really thin below that level, and that's why it's like you got to proceed with caution if Bitcoin breaks that support. So yeah, there's ways to get out of this, with little to no damage, with not too many more losses. But yeah, just not really that excited about it until we get in a midterm uptrend, which we were dollars away from. We were actually briefly be like starting to confirm the midterm uptrend, and then no, you failed. So
It would have been nice to have at least gotten a 382, which was 47K, off of this last ditch down for your 382 level. Yeah, 40, not even 47. It's like 46.5, and you're you were barely there. What is it? 46, 46. The fact
what
that
was
it
it?
you have
Oh, 40,600.
yeah,
Yes.
382 right off the top. The fact that you couldn't even get there again, that is important, because
Yikes.
if we were going to look at that as a potential B point of some kind of W formation,
Yeah.
well, you're not even coming close to the 382. So
It's
that
not even valid. Yeah.
yeah, I mean, and you have to come
382 is like
back.
what, 47,
Uh,
40, 46.8.
yeah,
Yeah, pathetic. So trash. I mean, that's kind of maybe got to give you a little hope too, that like, hey, what's happening right now? We may not be, the top may not be in too, where you just go fill a futures gap, and maybe you pivot, you stay above 38K on the weekly, and you never fall, you never go to 33K again. I mean, there's
yeah.
ways, but
I like to run through the scenarios of, okay, if I'm bullish, what's the best possible scenario for a major technical trigger to develop with what I'm staring at in front of me? And about the only thing I could really think of is maybe we just spend the next 10 days inside that candle, and maybe come down a little bit, retest this candle, the body of this candle a little bit more, like you're saying, more 37-ish. Uh, Still got a few days this week. So, I mean, I do think we're going to come down, make new lows for the week pretty soon. And
yeah, man, look what we're doing on the 4 hour. We're back testing 42. So we got a 4 hour candle close confirmation, below $42,000, and on this 4 hour candle, we've currently back tested 42K that was once a resistance support, is now resistance again for now. 2 hours 43 minutes till we have confirmation, but it is doing the breakdown and the back test currently. And even if you think about it, if you closed right now on the 4 hour at this price, 41,888, where it stands now, it would be the lowest 4 hour candle close since February 6th, which is lower than the low from Valentine's Day for the big rally. So,
and even with
oh,
this pattern, I mean, you have a type 1. By definition, I talked about this last week on my stream, that it's still type 1. The fact that we got an HSI signal. This is something that we do with the patterns and with the signals, really, is that if I get an HSI, harmonic strength index, that's counter to the pattern, which this was a bearish pattern, came down, I got a bullish reading. That usually means more time, or the next HSI trigger, which came right here, setting it up. So this secondary breakdown, you take out, really it's that low at 41.5, 41.4. Minimum targets are 40,900. But more like, and I've seen this a lot with what the reactions have been, even on the first test of most patterns, is go down to target two. So 37,850 would not be crazy in this scenario, but clearly we're dropping into that reaction zone off the bat. And that was a 382. Yeah, this was, here you go. So let me clean this up for a second. Other thing, like a real fine point about this bat pattern is that it's actually an alternate bat. Why? Because your 382 is the B point. Now,
Mm-hmm.
there's the 382. It's a 382 is at the B point. That's a low B point. Still has to react. Okay. With that, we look at the 886. That's the minimum. Now, the thing with the alternate bat, it's not as pretty as, say, the regular bat structures that have really fat ABCD, like a nice 1618 ABCD. These get elongated, but the real takeaway, you do have your maximum 314 BC at the 886, and it's a stiff rejection at the 886. Another sign. These are early signs, folks, that when you see that kind of response off of the numbers early, I mean, it was just stiff, big candle wicks, can't even close above the level. Uh,
Mm-hmm.
that's going to have to trigger the larger minimum move. I mean, those are signs of larger minimum moves where you have to go down 1,000 right now just to satisfy the reaction, or next 2 or 3 days to target two.
Yeah, and I think it's very possible. We didn't really know yesterday. You don't know until you get the new data. I mean, it was fine. It was in a channel, but just the fact that I mean, I think the lower high, the discernible lower high than just the high we saw on the 10th and 8th. To me, that's like that smells like a type two. I mean, Ethereum really cleans it up. Ethereum's like awesome because it's so perfect. I mean, midterm downtrend still intact, and I think you just showed a kind of a really weak type two return of the bat. It was so weak that it couldn't even go retest the PCZ right at like 32.77. So I just yeah, weak, man, weak. Flip the chart over. You're still in a downtrend, or you flip the chart over. You're still in an uptrend, and you're just showing accumulation now. You're still in a downtrend if it's real life, and you just show distribution again
Where is that?
constantly.
Where do I go to flip that chart over? Yeah, I see you
Alt
do that.
I,
The I here?
alt I.
Oh, Alt I. All right, cool. Let's see. Haha.
Yeah, try it out. Does it work?
Yeah, I love that. That's actually I've seen you do that a lot. Where check your screen in a second, but
It's perspective. Yeah, I mean, I'm flipping. If I flip the Ethereum chart, you're still in an uptrend. You just showed signs of accumulation, which is really, really bad because that's not real life. So,
terminal bar check back and then go for, yeah. I mean, that's a real nice. So we flip that over, folks. This is what we did. It's a great technique. Actually, one of my old mentors, we when we were doing hand drawn charts, literally, back in, this is early '90s. A buddy of mine was a old grains trader on the Minneapolis exchange, and so
well, I
he,
bet he'd be losing it right now. Oats and wheat and all that going nuts right now.
yeah.
Anyway, sorry.
No, definitely. He did hand drawn charts, and he would flip over. He would say, okay, we'd be outside or whatever, and he would take the chart. And he's like, all right, now flip it over and look at it from behind in the sun and tell me, would you buy that or would you sell that? Do the counter. Because sometimes our brains were so geared up, like, okay, we're looking for the buy, we're looking for the buy. And yet it's a sell signal that, hey, we have to admit, these are sell structures. These are bearish structures that are pointing
Yeah,
lower. Flip them over to kind of trick your brain, and what would that say to you? Yeah, really nice W formation. Where, as I did it the other way when we didn't flip it, but still you could say some kind of bat formation in development, especially when you take out the B level. But that's a great technique.
Yeah, it just I don't know, helps keep you in check, keeps you neutral. Um, in my opinion, though, it just I don't know, man. I guess a lot of people have green shaded glasses on, so it just can help with that. But to me, man, it's just like Ethereum's just confirming that its downtrend is possibly continuing. I hate it. There are less market participants owning Ethereum than even just a week ago. And then before that, less market participants than the 13th of January, then January 4th, then December 25th. It's just a constant trend. And the trend is still intact as bearish, unfortunately. But we were so close. We never said that Ethereum was going bullish. I said on my stream, you have rules, things that have to happen. Sure, you can break a downtrend, a supply line. That's step one. That's like the road to recovery, but you're not even close to being out of the woods. You must recapture your previous discernible highs. 34.17 Ethereum didn't even come close. Bitcoin up thrusted through its previous highs, but that's not good enough because when you up thrusted through it, you sold off, then you rallied to literally back test the up thrust successfully as resistance again, which is a form of confirmation. But it was pretty weak yesterday. It had not really rolled over yet, and now it certainly has. And yeah, confidence just not as high now. But you're still like you're not dead yet until you truly, really get confirmation below 42K or even 40K for that matter. So
I think
yeah,
the
but
yeah, the best thing
sorry.
you can do. I mean, you're gonna take. It's gonna do more work, and that's grinding lower, sideways to down. Is usually an easy way to think about it because then it's funny how our brains can kind of we trick ourselves where we're like, all right, it's going to go down, it's going to go down, or whatever. And I like to just say, no, maybe we go sideways to down, understanding that no matter what, it's going to take time. And if you're looking for a short opportunity, you'll get one. This will stair step its way lower. I mean, even on the 5 minute here, look at all the patterns. Even on 5 minute, look at a couple of bats, alternate bat, other bat pattern, fails the crab miserably. But go to an hourly chart or 30-minute chart. Look at that hourly. Oh, look at that just completed a couple days ago. I don't know why I missed this on the hourly. Beautiful. I'm pulling up a deep crab with confirmation on the hourly that triggered back, what, 48 hours ago.
Mhm.
We're well below target too, and yeah, you until HSI amplified, even RSI is deeply oversold. Yeah, you're gonna more time. So I think
Yep.
we're gonna run to that 40 level, 40 whatever level. I think there's something. Doesn't isn't Biden coming out with a crypto announcement soon?
Oh God, I don't know. I mean, has
And
there ever been an announcement that's been positive ever from this administration? I'm just saying for anyone that's like a human, a citizen of the country. I mean, I don't know. Like, really, it's like, hey, let's just inverse everything that's good for anyone. Okay, awesome.
yeah,
Everywhere in the world, every freaking Western government's like that now, I guess. So,
we are in folks. We're in a unique time. I'm not gonna sugarcoat it, and I'm not gonna be political about it. Other than the fact that you have very bizarre things happening. I always thought that post 9/11, there were a lot of moves that were made that were okay in the name of security. Well, we saw how that worked out, and now we see what
yep,
these
and then
guys are doing now.
being weaponized against, you know, well, in Canada, it's happening where that type of stuff is being weaponized against the citizens of the country.
Okay, so
And then
Biden,
they have state media that like literally pushes propaganda against dissenters, right? It's so scary.
yeah, and I think it's these are some of the concerns. I don't normally go to geopolitical, concern myself with geopolitical headlines other than for the largest, broadest trend consideration. For example, when George Bush Jr., not a fan, and I'm not political, I would probably identify myself as a Republican, but I'm not a fan of George Bush Jr.
Yeah,
But
they
we
literally lied.
Yeah, but when even before 9/11, when he got in, and I was spending a lot of time at the New York Mercantile during those days, everybody knew oil was going to run. Oil was going to go. And just because he was an oil man, his daddy was an oil man, this is how it works. And so with this guy, currently, he touches things, they fall apart. And so if he's going to put something out, which I'm looking on CoinDesk, that according to Bloomberg, they're readying an executive order. I got to get a date. If anybody knows a date on that, pop that in the chat. But these are the kind of things where, legislatively, they could stimulate something that's dramatic. And I think it's the case study that I always comes into my mind when I think about these things is not a lot of people really know that the crash of '87 was mostly caused by the Reform Act. There was a major banking reform act, and before that passed in the summer. Took away a ton of deductions. Took away used to be able to deduct credit card debt. I mean, all kinds of stuff like that. And I think it minimized real estate losses, and that's what triggered it. And it sent the market into a death spiral. That again, in terms of price, it was or in time, it dropped dramatically. But in terms of time, it didn't take long. It just seems to
Oh
me
no, but the recovery too was also pretty freaking fast, right?
it was, and they had a lot of room to cut rates and do things like that.
Oh yeah,
But okay, just
true.
reported today. Thank you, Bino. Bino says literally today he said they're going to announce something next week. That's
Yeah.
not
Oh, well,
positive.
yeah, dude, it's God knows it's not. It's gonna probably be terrible. Probably gonna I mean, again, there's nothing good that this administration's going to announce. It's all about gaining more power, more governmental power, bigger government. That's what this administration is. Not for you, for them. More surveillance. They got to pass bills, right? They're trying to pass a bill right now to literally be able to try to backdoor your iPhones that are already naturally encrypted. And do you understand what could happen if that bill passes? Like you can't have a back door that's only for the government when I mean that's scary enough, but like if the government can backdoor like with, the system that's encrypted, then anyone else can. Anyone else will be able to do it. What about other governments that want to hack in to US citizens' phones? Right? There's just nothing like is there anything positive that can be like announced from the government now? Like not anymore. It's all like fear and oh God, what are they gonna do this time? I just how bad like how radical can it get now? What bill can be put, up in Congress that is the most radical? That's kind of like what they're going for. They're doing it while they can. This is like World Economic Forum stuff for sure.
Yeah, and you're going to be in kind of a malaise situation. I've seen it. We had it with Carter in the 70s. You had it with Ford in 75 after Nixon resigned, okay? The markets were just such a funk because they didn't see the policy changing. There were a lot of structural things that had to happen that took years to happen before the larger market changes occurred. So for me, folks, I mean, I don't spend a lot of time talking about things like this, but clearly the larger environment, we're in a different larger environment that you see it where energy is playing catch up after being depressed for 10 years. You're seeing
After
that
the oil glut, yeah.
interest rates finally do the move that all technicians have been fearing for, I would say, at least 7 years. I can't tell you how many technicians I've talked to that said the number one market to look at for this whole QE thing is when interest rates start to spike and get out of control. That's the sign of the end of it. And
Hmm.
my good friend Paul Desmond, who passed away a few years ago, this guy is a legend of technical analysis, and I had a lot of great conversations with him about a study he did. Spent 3 years. He and his associate spent 3 years studying the 29 top, and he was telling me right before he passed away. It was just like 2000, I guess 16 or 17 was the last time I saw him. That the market structurally was already there for a 29 style top with everything that was going on. And this is 2, 3 years before COVID and everything, where I think maybe it got stretched out a little bit, but the larger implications that people are fearing will be realized. Now, this is the other consideration. We see interest rates spiking and inflation spiking. The real consideration is that the market decline that did happen took the better part of 2 or 3 years to completely materialize. You were more in a range bound situation. You had a couple of scary drops, but certainly it took a great deal of time. And what we're looking at, I just popped up Apple, by the way, on a daily. It's a massive crab pattern. It's probably one of the 4 or 5 stocks everyone needs to watch because it controls the indices. But we have, massive crab
Yeah.
pattern on the daily that even in a type 1 reaction says, come on down another 10, 15%. Um, a lot of these that once they get going, then you can start the counting. Like if we violate the January lows, now I'm going to bring up Nasdaq chart because we're not doing anything. We're down today a couple hundred
Oh,
again.
dude, we're back below all resistance, man. That's bad. I mean, we were like, but we were at least testing that resistance support yesterday. We touched it again. That's real. And now you have like, look at the hidden bearish divergence on the daily developing. God,
Yeah.
that's just so bad,
Let me
man.
bring up RSI too. I'm gonna bring up the RSI band. I'm working on eSignal platform. Hey folks, really quick, let me give a 2 second promo. We're working
Yeah.
with Harmonic Pattern Collection Pro, and I want to introduce for everybody that's here that is not working with my TradingView program, a free trial for everybody. And even if you've tried it in the past and you want to try it again, by all means, all you need to do is send your TradingView username to hpc at sr-analyst.com. Miss Stephanie, please put that in the chat. I'll pop that in the chat in a second to where to hook up. Now, the thing is we have a major update that we've done an enhanced pattern work with the new PineScript version 5. A lot of the early responses from users is that we're getting more patterns and it's a lot more responsive. So I just wanted to show everyone that go into your indicator section for TradingView and go to invite only scripts, and then it's the new harmonic patterns indicator combo that will bring everything together. Okay, so you only need to install that one. With the TradingView program, we had to build it out into modules, but this puts all the patterns into one, and it's an improved pattern algorithm template. So check that out, please, and everyone is welcome to get a free trial for that. And for those that already have the program, all you need to do is sign out of TradingView and then sign back in and go and add it. You want to add it where your invite only scripts right there. So I meant to mention that earlier. But take advantage of that, folks. That's it. Does everything automated, all the patterns. I still say by all means understand the basics, understand the kind of the formation. You can do that by going to harmonictrader.com and then watch Mitch. Mitch is on. Oh, get out of here. Miss Stephanie, my website's down again. Are you kidding me? What's going on, folks?
Did y'all crash it?
I don't know. Maybe you guys crashed it.
They've done that before, remember?
Yeah. All right. Well, when it's back up, go to Harmonic Trader or go to Mitch's site. Go to YouTube page for Mitch, Mitch Ray TA. And again, Mitch is doing, I think, man, you got the best TA show, period. And I watch when I can, a few nights a week. Um, so
Going us down for real.
I think here you go, Mitch Ray. Oh, yeah, Mitch Hedberg. That's the two Mitches. So there's Mitch Ray, TA. Get with him there. Um, but understand the basics with the software, though. For my actionable opportunities, I'm only responding and using generated patterns. It's been, for me, reliable and gives me a uniform way to identify true zones, true harmonic pattern zones. So that's my 2 minutes. And Miss Stephanie, please let me know about. Check out the website. Go to the host and let me know. But thanks. She posted the email in the chat, folks. So check that out. I do want to jump over to the pro platform and look at some of these charts. Here's NQ currently, and on the daily level, we're already generating a potential crab pattern that will give us a 1618 off of the October low. The October low to the December high, we have already put together the 4 of the 5 segments to say that our larger assessment is to go to 1618 on at NASDAQ futures at 12884 minimum. We also know crabs like to overshoot. So let's say 12.8, 12.850, something like that, where we're seeing it. We're seeing that NASDAQ, it's rolling over today. But
Yeah, it's not good.
we're just, we're just really one low away. We violate that, the bullish engulfing from 2 days ago.
Hmm.
You
Yeah,
go,
I think you have a kind of a, I mean, in my opinion, I think you have a confirmed bear market once you fall below the previous low at this point. It's confirmed. It's like it's doing literally all the rules, like of recapturing your previous discernible low after already making consecutive lower highs, lower lows already. So, and you extend, you actually crack below a 20% drawdown from the all-time high, which is a bear market in traditional, sense. So, uh, not good. Yeah, even if you get that crab, like you could get a reaction, but it, good chance you at the 1618, you react there, you rally. What are you gonna do? You'll probably just make a lower high than your previous highs, and it very well could start underperforming. Yikes.
yeah, the template is certainly the 2000 bear market. That top,
Yeah,
and again, you had, look, that bear market had gave you months, and then it dragged. And I'm going to do a quick comparison in a second of where we are versus there. But the big numbers, if we were going to throw down like that 12.8 number, the other way to consider it is what's the all-time spread. Normally I use 382, but for these instances I will use a 236. Minimum all-time retracement is 13,000. The all-time 382 is 10.6, and those are two numbers that, I will take, one chunk at a time. I really think the 236, we violate, we roll over in the next week, or we finish the month terribly, then yeah, almost have to kind of satisfy a minimum correction would be 12.8, 12.9. Full bear market, okay, would be obvious breakdown under those levels. But I would think that it really depends on the monthly closes, like you've been saying, and looking at those individual levels. Nasty month for January. We almost had that 3 bar reversal where the close, had we had a close in January under 14.4, I would actually say, yeah, Mitch, we're there. And that would be the start of a larger
yeah,
downtrend.
but you had to get that rally. You had to get the relief rally because you had to induce buying from retail and scrubs, so liquidity could be there for more short selling or offloading. So, and what I'm worried about is, yeah, we do have 11 days to go, but or 12 days, whatever. But you are about to confirm the bearish engulfing candle with follow through, and that's as bad of a candle as you could ever get. What you really want if you bearishly engulf is to reject it, get something not bearishly engulfing. When's the last time you had a monthly bearish engulfing candle?
Well,
2018?
I
Or no,
don't.
it was like COVID crash, maybe?
Yeah,
I guess you had like another one right there that got what happened? It got invalidated. Look, you saw that's like I remember we looked at it. You were bearishly engulfing, and then the next month we engulfed the bearish. So what happened? You got no follow through. You got rejected, and you rallied. But now you have another bearish engulfing candle this time that's much larger, and it's going to confirm most likely that the bearish engulfing candle before it was valid. Unlike the previous time. So yeah.
the thing
Um,
about the engulfings too is that you get a 1 bar continuation, then it's, yeah, then light switch is on. and you can look for more. But if it's a one bar event, then okay, maybe not. I really think the close of, if you close under at least 14.9, or certainly under that prior month's low, anything under 13.7, yeah, then I'm there. And I'm there in a way where you can look at all-time numbers and then I think logically just go from the COVID low and do your spreads. Looking at, again, 382 off the COVID low is 12,890, and that makes more sense to where, from a bear market perspective, if we're going to get nasty, we're going to slice through. We'll go down to 12.8,
Yep, for sure. We'll go test that low from last month. Absolutely.
and then I wouldn't even think, I would think it's basically two concrete levels of that area, 382 or even a
Hmm.
50, where if this gets ugly, let's say we're facing raising rates, we're facing just absolute uh, bungling administration, terrible economic policy. Face the facts. We go. What are we going to go? Double digit inflation? I mean, that's what
Oh,
the
we no, we already have, dude. It's already a certainty. Are you kidding me? 7.5% CPI, and that metric, the way the Fed gauges the CPI has been changed now 21 times in 30 years. If we go back to the 1980s level, we are like 17, 18% inflation right now. But forget that. Just look at commodities. Look at coffee up 100 plus 115, 130% year over year. Look at oats. Your buddy, he'd love it. Up 100 plus percent. I mean, you have hyperinflationary characteristics on some cost of goods now, which that's the definition of hyperinflation. Year over year, the cost of a good increases by 50% or more. That's happening with multiple commodities and assets. So to me, it's like we're already there. That's just, let's prevent panic. 7.5%. That's alarming. Well, they're still lying to you. There's like, have you gone out and got food lately? Did you see the Super Bowl prizes for a beer was $20 for one beer at the Super Bowl? Like what? And here's what's crazy. I've learned that multiple companies are at record profit levels, not revenue. We know revenue in an inflationary environment, duh, it's the causation, right? Or it's like kind of a side effect. But if you're talking about record profits going on, that means these corporations are taking extreme amounts of advantage of this. And it's great. They love inflation because they're like, it's an excuse to raise the prices absorbently, right? It's just crazy, man. Um,
Yeah, you have a cycle feeding on itself right now. That's for sure. You've got a perfect environment where people are just using this as an excuse to jack prices,
mhm.
and
All more than I need to. Yep.
there's no messaging coming out. Like, that messaging or the way that they're handling the situation is not going to change, where people are going to see that and be like, okay, we can continue to raise prices. Even something as simple as like Amazon.com taking their prime from 120 to
Yep.
180. Everyone's going to do that, and that's going to hit the poorest folks the worst, and
Absolutely.
and the
Yep.
rich are going to get richer.
I don't even know. I mean, like richer getting richer, like, yeah, the ones that own probably real estate and actual gold or something. But what's scary to me, and I talked about this on like the last time we had a Patreon hangout last week, it's so scary because it's like, about half the US participates in the stock market. Okay, well, most people are going to be affected by inflation, but they're protected. They've been protected by the inflation because equity prices have gone up, their 401ks have inflated too, just to keep up, kind of, right? But the issue is if we start going into a bear trend and all those gains are lost, inflation's not going anywhere. You think the cost of goods are going to go down in the next year? They're not. They're probably going to continue going up in price as if companies are reporting record profits, they aren't going to stop, man. So you're going to have like middle America that participates in the stock market that it's going to be down 50%, and they're down a lot actually with inflation being high. So I think that's like stagflation, right? When you go into a recession and there's inflation, holy crap. That's kind of like what it looks like to me where we're headed. I don't know.
I agree
Like,
with that. No, we certainly are. Stagflation is absolutely it.
it's exactly what's going to happen.
A lot of times that's an overused word, but in this case, no, because you've got growth, but it's not sustainable growth. And it's funny because they talk about, okay, the wages are up 4%. Yeah, but costs are up 7.5. Do the math. You're down three. And this is kind of the convenient facts that these people want to play. Meantime, in reality, it's hitting hard the economy, and the economy will basically it will sort this problem out. It's not like this problem is going to go on forever, but the way that it sorts itself out through basic laws of supply and demand. You're going to get a slowdown. For as crazy and as bullish as everyone was on the chip sector the second half of last year, if you don't have the chips to make, you're not going to be able to
Hmm.
sell them. And no matter how hard or how high that demand is, if you can't deliver goods and services because the overall structure is hampered, slowed down, your capacity to produce is hit its limit because of
Yeah.
fiscal policy and actual government regulation on top of it, that is a bad recipe for setting up some kind of stiff correction. Here's how bear markets go, folks. Bear markets, they start exactly the way we're looking, and then they're going to break some kind of major harmonic, a major
Yep.
pattern. Like we're looking at the SPY on the daily. We have a beautiful shark pattern.
You mean a 5-0, right? With a confirmation high or type 2
Well,
return?
the
Yeah.
shark, I was going to get to that. The shark has gone to a 5-0, and it basically 450 on the SPY, 4,500 on the index, where we're in the process to retest 4,100, whatever. Maybe we go as low as 4K. But beyond that, this is where we want to. I'm looking personally that if we're going to see something dramatic develop, this area will fall apart, and there will still be plenty of time to capitalize on the downside. That's something to consider where um, we're going to look for the breakdown somewhere around 4,100 if it's going to happen. Here on the weekly,
Hmm.
just showing, I'm going to highlight somewhere like there. And if we fail those levels again, we come back to the full COVID range, where I personally think, like crypto, our 382 no our 236 is basically around 4150, this 4,000 level, and you lose that, then yes, the whole COVID range is at stake, and it's going to take 18 months, maybe a maximum of 24 months, much like the NASDAQ did in 2000. So these are the considerations to focus on. Um, Look for some kind of event driven
Oh
uh,
yeah. Yeah. Yep.
occurrence like
It's gonna
9/11.
be a limit down day. Yeah, you're gonna limit down or something crazy. Oh yeah, it probably might have to do with this whole, Russia thing, if Ukraine and all that stuff.
It could be something
Um,
like that. And again, who
or
knows?
Canada martial law. I don't
Yeah, I
know,
mean,
man.
come on, Trudeau. Really, it's this.
Oh,
I
it's
mean,
coming, dude. Are you kidding me? It's
Canadians
gonna
are
happen.
the friendliest people, friendliest society on the planet, and for this kind of nonsense, it's amazing. But take a look.
Dude,
Uh,
the Nasdaq, it's if you look at the weekly, or if you draw a horizontal line at 14,171, which is that peak from February 2021, it was already bad last week because you tweezer top bearishly engulfed. But now look what you've done. You went up to back test that up thrust that resistance perfectly at its top this week. So it's like this week you back tested February 16th of 2021's high perfectly. I mean, it doesn't get any more bearish than that. Last week, again, though, I was stupid bearish on the Nasdaq based on those two past weeks we've had. But now it's even worse. It's like confirming, you could close maybe tomorrow in the red on the week. Good God.
yeah, yeah, we're coming into Friday again. What you only need a couple hundred points down. I mean,
Yep.
we're trying to pop today, but A close under any close under yesterday's low, basically 14.2, under 14.2, that could start the trigger of a larger slide.
Yeah,
Um,
so you're confirming now that what was once a resistance support is certainly resistance now. And hidden bearish divergence arguments still there on the daily. So continuation implied. And just, dude, look at the 200-day simple moving average. I know it's not on your chart or anything, but
I'll
the
pop it on.
200-day simple moving average, we never are below that. I mean, never. Like COVID crash, of course, you fall below it, then you get back above it. And then before that, last time was in May, June 2019 for a second, and then 2018, and so you're getting in extremely bad conditions when you're below that 200 moving average.
Let me bring that in.
But it's like, really unfortunate, but at least it makes sense. All of this makes tons of sense, and you can read the chart and kind of understand. It's not a good asset or index fund to be in right now. It is not. And there are all these technical reasons for why. There's no value, high premium. You're now rolling over. You're down, from your high to low. You dropped 20% before a relief rally, and the relief rally just manifested into back testing critical levels as resistance again with confirmation. Those are just terribly bearish things on this index fund. So, I mean, just in my opinion. But the real good news is we have another market that is not doing anything like this at all.
Yeah,
That is looking like I PM'd you, right? What's happening right now,
let me see it.
or DM'd you in Discord. But you have
I think you
a
put me.
handle breakout. You see it?
Where did you put that?
Just I DM'd you in Discord.
Let me see. Oh, and beautiful.
Yeah, right. It's just like so dreadful and depressing over here. But then you go to that market and it's just like everything's good, man. Everything's like just getting ready, man. Getting real ready for all-time highs and beyond.
Yeah, so Mitch, that's great. And you flipped it, right?
But no, that's real. That's the gold chart. Sorry, that's the opposite of
Oh,
the Nasdaq.
oh, that's
Sorry.
gold. That's
That's
gold.
yeah.
Yeah,
Yeah.
gold,
Dre-
definitely. And gold's another one. We're taking more time, but that's okay. I'm not. Let me get. I screwed that up. Let me get a new chart here. Um, Gold, yeah, and I'm been bullish on gold. Most my folks know that 1720 was huge, and let me bring this up. Oh, it's up 1900. Nice. Hold on. I gotta bring up the chart. Oh, there it is. Gold up $30 today. You gotta like it. I think gold's 2100 all over. Silver's beautiful too. Uh, Look at that. 4 hour chart. We have a nice deep crab at 1900, but we still that can run higher. Your other indicators are still expanding, which is quite nice. Let's go to the daily. This was the thing we've talked about over at Harmonic Trader forever. Check out the massive bat pattern that has, took its time on a type 1 after the type 1 reaction. And that was what, 2021, a year ago. And it came all the way back and spent months grinding at that 1720 level. But this is where we expect and look for the type 2s, even if they take too long. There's your type 1 reaction. Beautiful completion of the bat off of the prior year's low. Sets you up. Now, the reaction was triggered. There's your HSI arrow, folks, that signaled the end of the reaction. That's how we look at that. And we do expect the retest. This is kind of like how I see Bitcoin, what it needs to do. It has to come back for a full retest, because then you can get situations like this where from a structural perspective it's confirmed. We do anticipate, I would anticipate a move to 1946 based off of that bat pattern. Then you go to, say, weekly or even monthly. This is a real impressive chart. You know, you've made that remarkable progress. Huge wedge, bullish wedge about to break out. I mean, that's ideal after spending over a year, 18 months in this wedge zone. Now you get the continuation that I've mentioned this before, that this large structure is an alternate bat at a 113. This, like, look at it, pretty much at 2100. Bring this up. Come on. And these are your two measures. The weekly, the 1.13, again 2130 or 2060. Let me improve that. Then I would look, that's clear. We're in that type 1. That was ideal type 1 reaction material. Now we're back on our way where pretty much line up, book this for a 1618. This is longer term. This thing continues to build, where 1.618 I think puts you 24, 25, 2500 off of that correction. And gold's been, slow as molasses, but if it was going to break down, if you were going to have a problem in gold, you would be lower already. That whole wedge. Now, today, beautiful. What do you think? You there? Think I lost you. Did I lose Mitch? I lost Mitch. Hold on 1 second, Mitch. Oh no, man. Hold on, I got to go back to... Sorry. I got to get... This is the Discord link. What happened? Did I cut you off? Hold on, folks. There you go. Let me get Mitch here. Hi. There he is.
Yo.
Welcome back. Sorry about that.
No, it's all good, dude. Things happen. I was just trying to get your attention. Yeah. So, yeah, gold's just right at that $1,900 area, that weekly high, December 2020 and May of 2021. Right back. You understand something crazy that's happened today on gold that hasn't happened in many, many years? Highest level of volume today on gold since October of 2013.
Wow.
High volume on a breakout on the weekly.
Let's load that in.
Yeah,
Volume has been
beautiful.
interesting lately, and it's something I don't talk too much about, but um, people should be looking at the volume. We saw the volume with Bitcoin being super low, and that's the thing with volume. It's either super low or super high, where you want to pay attention to that. So let me see. Where's the man? There's so many different volumes. I just need volume, guys. Let me do it this way.
Oh, and the monthly is showing hidden bullish divergence, which is incredible on gold. Just so insane. You haven't seen positive momentum on gold since January of last year. That's just crazy. You broke out. You had a break, almost a break hook and go off the handle or the flag, whatever you want to call it. My God, name of the measure move takes you like 2,400 plus.
I think 2,500 is a pretty safe number off of
Yeah.
this level.
Yeah, in this environment, yeah, with what's happening, you can clearly see where the capital's going. Like there's finite capital, and clearly it's gold and it's silver and it's platinum. Did you see? I don't know if you saw the stream yesterday, but platinum literally has broken this insane resistance. Like it's going to 1337 most likely now. Like based
Platinum
on
has massive. Check out the monthly chart. on platinum, folks. This is the thing with these massive
XPT. Yeah.
patterns that with the software, it's been a kind of an exploratory thing for me with the software to go do super long term analysis. Patterns are working out the same way. And when we get stuff like what we have, the current situation in platinum, which I've been talking about since this 800 level, basically the big 886 is at 885. Interesting. 886, 886 is at 886.
Of
Some
course, yeah. Got to be
sometimes
like
that
that.
sometimes that stuff does work. It's a little kind of observational side note, but in this case, look, platinum, clear type 1 action. I mean, ideal to 1234, 1234, then back down into the zone. I mean, exact, folks, exact retest of the $885 level, which was the 886 retracement. Now we're breaking out 1092. What is this? A type 2 takes you to 1495. That's the target off of that measured range. So sometimes it's really clean, other times it can be stretched out, a little ugly like this, but as long as you're connecting dots, terminal to target 1, back down to terminal to target 2, that's how we assess it, and that's where, look, these are prime location for what you want to see. And the metal stocks like Barrick
Oh yeah,
or
breakouts.
gold.
GOLD.
Let me scroll.
Yeah,
That's the
yeah,
old
man.
symbol, gold.
Oh,
Um,
it's mooning, dude. Look at it. It's crazy.
the gold, and this is where you wait and wait and wait. Oh, last five couple days, super huge, massive 20% move. Let's go to the 4 hour chart. This is Barrick. This is one of the big boys. Look at
Hmm.
that butterfly in the 4 hour now blowing it out. That's nice. GLD.
But dude, look at gold where it's going. Like 23.45. That's insane. That's a crazy resistance, right? Well, it's like go back to 2002 on GOLD. Go back to 1998, 1999.
Yeah.
Look at how real that inflection point is that you're about to be testing. You'll probably test it today, maybe. It's so close. What if you break that? God, if you break that, man, historically, some pretty insane stuff's happened.
There's a
Jeez.
I love long-term charts, folks. If you have not looked at long-term charts, I suggest it. Oh, I forgot about PLG. That's the other one I'll show them. PLG is a good one. Let me hold on. Let me bring that up in a second. Platinum Limited Group. Platinum
PL is
Platinum Group
LSL
metals.
futures.
Yeah, it's up. Um, so gold clearly, this is fireworks. This is the kind of first thrust thing you want to see for major moves, because you're not going to get big moves start in big fashion typically, and this is that first breakout bar. That's what you want to see. Where let's continue that uptrend on a monthly basis. Pretty clear. What you're saying, Mitch, is all of these tops are the clear obvious resistance, and you break out there, then you could target
Which
an
which chart is
886.
this on your
This is
screen?
gold. Gold.
Oh, this is gold.
The
Wait, what?
this
Oh, Bear Gold.
Barrick.
Good
Barrick.
God, man. What time's monthly? Look at dude. The monthly is showing I don't think I've ever seen a potential uh three rising valleys so big. I mean, that's look at that. Three, like that's classic accumulation, three valleys, two
Mm-hmm.
peaks. That's it. That's a massive accumulation pattern. So, and look at the failed breakdown attempt, back from 2000. You held. It's kind of like you sprung, you even back tested the spring. And good God, man. Yeah, that's wonderful.
Now there's your quarterly chart,
So bullish, dude.
and for gold stuff like this, you're looking for those larger moves. These things move like snails, but once they start going, pretty clear the direction they're going to be headed. This is a quarterly chart,
Dude, no way.
and you've got a
Wow.
3 bar breakout. You have a 3 bar. Well, not quite. You're almost there. You'll have a 3 bar breakout above 25. You got 10 more days, but that would be huge. And there's this one. There's the other one that I was talking about was it Ashanti Anglo Gold? Here's Anglo Gold. Weekly, monthly, all the way back to the 80. I think it was a monthly as well. But a lot of these they're slow movers. But if you're looking to put some capital somewhere where
Yeah,
you're going to
really,
be
in this
safer,
environment.
yeah, this is something where you go from 20 to 30 or 32. Yeah, let me do let me do the nugget miners because that's the more speculative
Yeah.
junior miners. Uh, Bring up the daily on the junior miners. Yeah, nice.
Dude, the monthly's insane on GOLD.
It
I don't
is.
know. I just pinged all the patrons about it. Like, dude, you're showing hidden bullish divergence on the third valley. That is like the strongest combination of variables you can get for this thing. So good. Wow, and I love how March of 2020 you went to back test the old 1998, 2001 levels as support. It's so good, man.
GLD is a good vehicle too because it's one of the biggest miners out there. You're going to have good liquidity. It might even be better than, here it is. Here's Barrick Gold. Um, might even be better than the GLD. You get better movement, but they're waking up.
Yeah, higher multiplier probably.
Yeah, I think
Yeah,
the
that's where
other.
the capital's going.
Yeah, maybe look at some of the other Canadian miners. Might be a place to be looking at if this is going to happen. Here's that Platinum Limited Group, Platinum Group Metals. I mentioned this a while back. Look at this bat pattern. This is a beauty. All the way down
Oh yeah. Jeez.
147.
What's the
Now
ticker?
PLG, Platinum Group
Oh,
Metals.
okay, PLG.
But there's a ton of these.
Wow, like the flatline just died.
Yeah.
Oh, because is it a levered? No, it's not. Never mind. Yeah, what happened to it, man? It got devastated. Oh yeah, I have the bat up. I've been here before, dude. It's like not just the bat. It's like weekly bullish divergence too, and daily bullish divergence. Yeah, dude. Oh my God.
Yeah.
Yeah,
These are the
that's crazy.
sleepers. These kind of sleepers. Um, and a couple people are mentioning copper. What's the oh god, give me a copper
Yeah, it's a
symbol.
beautiful.
That's
I mean, I
SCCU.
know there's XCU. XCU is like XPT or XAU or XAG. It's XCU, and that one's just a massive potential reaccumulation continuation pattern. Big
Let me
symmetrical triangle
go
back to
futures.
2011 highs, testing it.
What's
It looks so good.
HU? What's I can't. What's copper futures? No, that's heating. What's copper futures?
XC. No, that's corn. Never mind. I don't know what copper futures are.
HG. What's copper futures, folks? It's
HG is copper futures. HG is
HG.
copper
Yep.
futures.
Okay.
Yeah,
So there you go.
yeah.
On the weekly chart, massive bat pattern down at the 209 level. Not that I'm saying this is actionable. I'm more saying this is what could happen.
Yeah, if it fails to break out here. Yeah.
Yeah, well, there's a lot of metal stocks that have big bat patterns right now, and they're retesting weekly 886s. You're seeing, stuff like Barrick Gold and PLG they've retested a lot of historic lows, even though they've been devastated. You look at the spot price on copper. This is the other thing, like gold and the others. If we break out of that wedge, that's massively aggressively bullish, and go to monthly chart to see how far this has come. You know, new highs.
Yeah.
Are we going to go five handle above five for copper?
Are we supposed to? Your chart's kind of blank. Are we supposed to see something?
Let me see here.
Oh, there we go.
Yeah, I don't know. I'm double checking here, but and it's coming off of big patterns. Really coming off of big patterns. I
I mean, it
want to.
looks like bullish consolidation, doesn't it? Like, but it's at a resistance. It's at the highest risk area you could ever go long at, to try to play a continuation. It doesn't really.
Yeah, I'm just saying. I'm not. This isn't actionable at this
Mm-mm.
point. I wouldn't be. It's not something I'm looking at. Rather than if the miners are going to play catch up, which is typical. You get futures to move first, maybe for 3, 6 months. And if it's going to be a real deal move, the miners will catch up. They're usually laggards in the space. So all you really need to do is get these futures to go continue to grind higher to get bullish pressure onto those mining stocks. And
For sure.
especially people getting out of tech,
Yep.
they got to go somewhere. They're gonna rotate into mining.
Massive rotation. Yep. It's already, you can see it in commodities. I mean, just all of them, like all the commodities futures, like coffee's at multi-year highs right now. Orange juice is pulled back. Live cattle futures, as I'm speaking to you today, this week, is multi-year highs, highest level since October 2015. It broke its major resistance. It's going for the pattern completion zone of a shark, and we're talking like 160 plus. So your steak's going to keep getting expensive, for sure. Cotton futures finally pulled back down 2% today, but only after hitting multi-year highs like yesterday or last week. And then soybean futures, literally, you can talk about copper, then go to soybean futures doing the same freaking thing, like right at the highest levels, the top of the range. Like we were
Yep.
looking for maybe a, double top, possibly.
Here's a chart of Alcoa, and Alcoa on the monthly had beautiful deep crab, and it's a type two. It's very is a clear type two that the whole thing. Amazingly, your first type one reaction took 8, 9 years, but it still worked. Then you come back for the full retest, which only took two, and now you just hit target two off of that pattern in extreme
Yikes,
fashion.
Bitcoin's dumping.
Is it?
Yep, yeah, it's something bad. It's on 500 points from where we were speaking, from where it's been all stream. And it's going to fill that gap for CME futures for sure.
Let me take a look.
Big yikes.
Yeah, probably want to get it back on. Yeah, down 26,700. Oh, Bitcoin, Bitcoin, what will you do? Remember, folks,
You just confirmed a lower high.
yeah,
Nice.
big move start with big candles. And that's my thought here, especially with an HSI on that. That's a daily HSI continuation for Bitcoin. Let's check the other feeds. Yep, most of the other feeds have it. Meaning it's like this. Okay, let me pop it up. Here's HSI. That's the top indicator.
I can't see it on your screen.
I'm popping it up in a second here.
Okay.
Yeah, there's a little bit of a delay, but and let me take off the others just to see.
NASDAQ session lows right now,
Yeah, let's see.
going to fill its own gap.
Remember, Nasdaq is got nothing till the retest that the couple big patterns. Um, yeah, we're triggering that B point down for minimum 886. I'm going to say 37, man. I'm not even going to say first stop obviously will be the target one level on the bat pattern at almost. We're almost there now. We'll be there in 300 points or two
Yeah,
minute
it's coming.
2 minutes.
Yeah,
But
we'll be live when it happens.
yeah, so there it
At
is.
this
Target one
pace.
coming at you fast. And the only thing I want to see is the only thing that'll stop this is a bullish HSI or your bottom RSI, and they're expanding in the extremes. So this is definitely something interesting. Let me pop over to NQ. And where are we going to go with NQ? Because that spent, there's a couple of things right now where we're in the return process on daily and 4 hour. Yeah, look at that. Here's the 4 hour situation with Nasdaq, and I'm probably gonna try to see if I can capture this by the close. Go split here in a few minutes. We'll wrap it up. But I do want to. Been waiting for this. I tried to spend all day in front of the screen yesterday looking for this thing to roll over up here, and it just dragged until the close. Now we get that.
Yeah, it was so weak. It didn't catch a reaction really, and then it just later, yeah, and then the bearish engulfing candle last night did it, and the follow through is so powerful right now.
Yeah. So this return, this is clear. Gartley. It's a type 2 return, meaning your first reaction off the Gartley, which completed back last week. Simply, I mean, it was real sweet. It was a beautiful type 1 reaction. Your XA, why the X here and not off of that prior level is because of your B point. Your B point here works out to an exact 618, and you had proper A, B, C, D. So look at how that lines up. That, as I say, the true harmonic, clearly responding in a reaction fashion. That's good. You even had your arrow here with HSI. That's ideal. That's a beautiful, I would say, perfect pattern that still only gives you a reaction. And that's those. These are just the facts about harmonic patterns, folks, from all the decades that I've been staring at this stuff. Yeah, you have. I mean, it's so easy to be at a pattern like this and be like, "This is it. It's beautiful and reversal, and it's going to go forever." But that's not right. That's not what how we should be seeing it. And now we're in a very orderly. It seems dramatic, but we're now in a very orderly return manner to come back to this zone where minimum XA level is at 14,136, and that's, I would be looking for that into tomorrow pretty easily. If not, let's say we get a collapse today or tonight, we could hit that easily. So let's see what happens with this retest, because this retest across the board, I'll show you this one, the SPY. These are for your major indices. This is daily level. We're in the return phase of these reactions. So SPY, I think that's probably the best, since it is S&P 500 and it's more broad based. You've got that clear return. You're in it. It's just going to take time, but you're in that clear return phase where, like in a serial fashion, like a combination to a lock, 1, 2, 3, 4, has to hit these pivot points. So for this shark to even be a substantial opportunity, get me back to the 419, 420 level, maybe as low as 411, but that's not up in any capacity at this time. So more pressure downside. And I heard you out. You spent. I think it was last night or the night before I caught you. You really did a nice work on this double top here, and how critical that double top on the S&P was. We haven't
Yeah,
seen
man, that was it, dude.
two
It's
abandoned babies or something. I think
a
you were saying.
double the double bearish abandoned baby combo. I've never seen in my life, and yeah, that was just psycho and just doesn't. I don't think any like, you show something like that, it's not good. It's not a good thing. It's like, oh, that's great, man. Double gaps, double bodies, and then double gaps down. It's so weird. And just double top, and it was at the 618. You know, I mean, bearish 50. Um, yeah, dude, real bad. And I hate it because of how tied in Bitcoin is to these index funds, where maybe in another universe, if the index funds weren't rolling over, Bitcoin's holding and probably above 44,444. But yeah, that sucks, man. That's like just yesterday, like I felt so optimistic on Bitcoin because it was so close to breaking it, but at the same time, the rule was if you didn't break $44,444, you were still in a confirmed midterm downtrend. Right? That was the breaking point, and you didn't break it. So the downtrend continues, Chad, unfortunately. And, index funds too. But not commodities, not energy. My God, man, I had took a short on ALB,
Mm-hmm.
the Morale
Albie Marie or
Corporation.
something.
I feel like I got really lucky here, really lucky because
Oh,
I screwed up.
nice.
I didn't even know earnings came out today, so I could have wrecked myself um, on that. So, but if you look at the chart, hey, lucky me, really lucky me, and it's I have heavy gold and silver positions in my brokerage and retirement accounts right now, so things are good today. Like that's up a lot. So with this on top of it, it's been a pretty good day. But like not for crypto. It's been terrible on the other side for my crypto account. So
Yeah, I think the thing to take note of as well, even in gold's up $30, which is great, and there's still. I'm always going to say there's plenty of time because the way these commodities they move or the way they turn, it's like a tanker in the middle of the ocean. It takes a while for the larger turn, and you're seeing it turn now, but it's going to take time. This is kind of like the shot across the bow. Like if you don't respect what gold's doing, or even the breakdown in these markets, these larger
Yeah, you
uh,
got to pay attention. Yeah.
you're gonna you run the risk of being complacent, and then it just passes you by. So even for me on the upside, even with like a lot of my energy plays, I'm watching it. I mean, I do think that energy will keep running, but there will be corrections along the way. I want to I'll show everybody one example that had earnings today, which has been a big winner for me, is this Marathon Oil, and I've mentioned it several times. It's up big. Let me show the. It really started a year ago off of this massive pattern. Check out this. It was a weekly pattern. Let me go there. And playing catch up, but we're running into maybe some short-term bearish patterns where I will look to take some profits here. Some of the other sectors, the mining sectors, I think they're still early. Energy may be a little bit more advanced. Um, MRO is giving me a couple of signals. I think MRO, beautiful deep crab here on the weekly. There's your type 1 up to 20, then came all the way back, hit the hop at 350. And we started, my crew over a year ago was in on this around 6, 7, and now we're 22. I've been saying, 24 area. Okay. So energy is maybe a little bit different, maybe further along than the miners. The miners, with today's explosion, I think they have probably more room to run. So take that for what it is. I think we're seeing the rotation. The only thing left to do, Nasdaq to drop and break down probably by month's end. Where are we now? Let's look at the 1 minute chart. Oh, we're new lows, session lows under 14.3. So okay, a nice couple hundred points since we've been talking. But target,
Dude,
let's target the 190 level for today.
for
Nasdaq.
LB
No,
or
no, for
Nasdaq, sorry.
Nasdaq. I mean, I think your short looks great.
It could last me a while. I mean, I might be in this position for a while. Like that might be a break. Look at the volume and the disparity of price from the gap. That might be a bearish breakaway gap,
Yeah,
at least possible.
I'll pop it up on the other platform. Because
Like
I had a
you
stock.
saw, I PM'd you my
Oh, your chart on that.
interpretation. Yeah,
Let's see. Oh, there it is. Oh yeah, look at that.
yeah, beautiful. Like how does it? It doesn't get prettier than that. Like you even get a confirmation high on the right shoulder. So symmetrical from the left shoulder. It's just like what?
That's just all nothing but air. Even it,
Yeah, it's just. I
even
think 187 you might test it, but briefly. I don't think it would last long.
yeah. That was earnings too.
Yeah,
Where
I could have gotten wrecked. I didn't know.
harmonic pattern collections generating ABCD, but that's all the way down at 190. So you're still, still another 5-7% lower till you even hit minimum retest levels. And so these are going to run. I mean, I think you're in that spot where
Jesus, dude.
if the market like Nasdaq or the SPY are have these return dynamics to them where we have to retest that. I'm not saying it's bullish. I'm just saying the way that these patterns work out, you have to do the reaction. You go to target one, you have to come back for the retest to satisfy the whole area if it's going to be a major bullish signal, which I'm not really there. I'm just saying you are in this phase where you do the return and you come back. That can usually be fairly aggressive, as I say, a serial move, bar over bar. Yeah, new lows again, and that
Oh
just
yeah, Bitcoin's dumping.
drops
Bitcoin's
down.
yeah, I think it just filled the gap, or it was very close.
We're there, what, under 41 now?
Yeah, yeah. Where I think we just filled the gap. I think we just hit a low of 40,800. So
That was the number.
I yeah, I think it was like 40,750 or something. But it's different when spot drops to a certain level. I don't have my futures up, like, because all the futures on TradingView are delayed for me for Bitcoin, so I don't have Thinkorswim open right now.
Just hit, and it's target one. So
Oh yeah,
that's sweet. 40,900. When we started it, we were above 40, what, 41.5 or something, or I forget, but we just hit target one
the
off of,
382.
yep. But you need some kind of confirmation value here. You need to see RSI or, well, HSI is oversold, but amplified. This is the amplified RSI. That's expanding. You need more time on this. And again, I mean, I think as low as 37 for this move. Target one is 37,870, call it. Yeah, and it's probably going to do it probably pretty much straight down for now until you can pivot out.
Yep, and I mean, like, just until something changes, if these index funds don't recover, then Bitcoin's probably not going to recover. I mean, I don't. It's
It
just it's
Yeah,
rough,
it's
man.
tough. I mean, it's this is one of the things where we can read it correctly and mark up the chart, look at it 50 different ways, come to our solid conclusion, but we still need to transfer that analytical decision to action of whatever action you're going to take. But certainly, if you're looking for longs, they're not here. And this has got a whole lot of things that have to happen until that could resume, which just adds to, all right, your belabored 6 month bear market, which is, that's what it is. And
Hmm.
and in that process, I'll have to wait. I would just have to simply be super patient. Give me major patterns, retest. Yeah, you do have this bat pattern. This is from the combo. I can tell these are new patterns because this is that combo, uh, the new combo that I put up. We didn't have this before on the daily, and let me, yeah, I'll bring that up again. But let me see if I can just make that a little brighter. Um, no, but I won't waste time with that. But even this bat pattern that's has materialized with the new HPC combo, again, 886 is, you retested that 33. Maybe you come down again. I have to see some kind of development of a short term daily pattern or oversold readings coming off these overbought readings and not even doing a 382 reaction is more indicative of a continuation of a downtrend. That's not constructive. It's tough.
Yeah, unpleasant truths.
Yeah. Well, I appreciate
Yeah,
your time today, man. I want to wrap it up. Really great knockdown session of everything. And,
yeah,
I think we have to just read it as it is and, you know, put the hopium to the side and say, look, okay, we want to look for an opportunity for Bitcoin, but at much longer, lower levels than where we are now. I'm still a fan of trading crypto, and I will continue to trade crypto if and when we get really solid setups. But we're not seeing that, and we're coming into an environment that people we haven't seen in 10 years. We haven't seen crazy inflation. We haven't seen crazy monetary policy. I personally have not seen a kind of a malaise over an administration since late 2007, 2008 with George W. Bush Jr. And then I'd have to say Carter, really Carter, because of how the attitude was late 70s, 1980. Even though fundamentally the United States was able to turn around in dramatic fashion after the capitulation event, which is interest rates going to 16, 17%. I'm
Oh, I
not,
don't think we'll ever go there again, right? That's never gonna happen.
I don't think that'll happen, but normalization back to 3 to 6% range is
Yeah, yeah.
probably what we're knocking on the door of. We go above 2 or even get to 3. People will they're getting nervous because we're above 2% on the 10 year. Talk to me when we get to 3 and change. Things will,
Yeah.
I think, dramatically shift because once you get back above 3 or 4%, then people are going to say, all right, it's no brainer. I'll take the 3% and no drawdown, where it's going to it's going to take a new phase. Like it's in the same way that they depreciated the interest rates, they cut them to zero. That actually happened in waves. It really went from like 8 to 6 to 3, and then once it went to
Hmm.
3, it was clear it was going practically negative or did go negative, and we will build back up the same way. We'll go to 2 to 3, and then above the 3 handle, it becomes a whole different ball game. But in that process, and I think it's not a direct correlation. It's kind of like a delayed effect. You'll see gold run, it's almost obvious. Inflation's screaming sky high. Why isn't gold moving? Why hasn't it moved yet? It's a
It now
delayed
is.
now is.
Yeah, you're right. Yeah, it was. The composite man had to continue accumulating. He wasn't ready, but you could clearly see on the chart he was accumulating. He was making higher lows over and over and over again, and it took months and like over a year. But once he finally gets his position, and time is right, and now look at it, and it's a monthly bullish engulfing candle, breakout of the cup with handle, you know, and you're headed towards all-time highs. And once you break that, you go into price discovery, and all of a sudden it is like, wow, gold that has been such a joke for so long. People talk crap about it because it's just not performed for a year. But I guess those people weren't participating when gold, the composite operator, acquired its position back in 2017 or 2016, and then you had that massive run up that so many tradable patterns, bullish patterns developed on the way up in that trend, and we could be headed for another one of those really nice impulse waves up where you just have the weekly, and you're able to trade. They'll be like three rising valleys on the 4 hour, or head inverse head and shoulders, or ascending triangles. All those will start developing, and they'll be tradable and playable. And yeah, you got to wait for consecutive higher highs, higher lows in crypto. I mean, like, we just gave it a shot. We just gave it the old college try. Bitcoin did, and it was very close. It actually upthrusted, and it was like almost where you could say you were reversing your trend bullishly in the midterm, but you failed. You literally couldn't. You like confirmed a top at that level, and now you've drawn down, and yeah, now you fill the gap on futures, and now you're in jeopardy of breaking below a critical support from January 8th of 2021, where there's very little price action till 30K. So um, yeah, I just don't. I hate this lower high we just put in. A confirmation high that confirms distribution at the same time is just terrible, man. It's awful.
Yeah,
And
I
Ethereum's even worse.
yeah, I think Ethereum is an issue. I do think Ethereum actually is more vulnerable than Bitcoin. I don't think
Absolutely.
I don't think you have the same kind of institutional super diamond hands. I mean, a guy like Michael Saylor, he's not selling. He's just not going to sell. He's going to go to his grave with that. Versus Ethereum, you
Hmm.
have different dynamics there, and I think it's just a matter of what price where this settles out, and we're seeing the signs that say nothing's here. It's ugly. Stay away. And again, just forget it. Where you could have something develop eventually, but it's so far away before that materializes that you're better off looking at other markets, other sectors that we haven't looked at for a long time. And again, go deeper into the commodities, go deeper into your energy, or speculate more on thing that comes to mind for me is like energy,
Risk off.
Canadian miners, Permian Basin, shale company, U.S. shale companies, because that's where I think the money's going to rotate larger on a larger scale, where tech grinds. I mean, look
Yeah,
at
I think, like, I mean, it's starting to get to a point where you're actually not off base by looking for really bearish patterns to like if they're at low risk areas, flip your chart over and one could buy a protective put or have a short sell with of course a protective stop loss. Um, I mean, there's nothing wrong with that. Like me going short on ALB. Sorry, I did make a mistake about earnings. Yikes. Got really lucky. Understand that. You should never play an asset the day before or a few days before earnings. Stupid. I didn't notice. But I did notice the massive momentum shifting pattern that was extremely large. I mean, talking been in development since August, and the double top on the right shoulder. That right there, man, that's there's nothing wrong with like taking a shot on that. And if it fails, it fails. But we're witnessing like a trend reversal potentially occurring on the index funds, and there's not much more price action that needs to be had before we confirm that on the Nasdaq. I mean, like, I guess there's a little bit more. Nasdaq does need to break below like 13K to confirm the downtrend, and that's a lot of price actions. That's 845 points. But like if you look left where the Nasdaq is between 13K and 14K, it's a very light order book where there are not many bids or asks. And so I could see you going down at 13K again, at least to try to attempt a double bottom or something like that, a confirmation low. But it's just very weak, the fact that you're below 14,171. And so, right, what's wrong with, identifying a bearish structure when your index funds are bearish? Like major reversals.
And starting to sell rallies, starting to sell
Yeah.
more. That was the thing about
Fade the pumps, right?
yeah
Fade the
the
pumps.
the 2000 market in 2000 crash in 2008.
Jesus, Facebook. Oh my God.
Yeah, had plenty of corrective rallies, but you had to keep selling them. Here's Facebook again, massive
So
decline.
disgusting.
Yeah, largest breakdown ever, largest single
Yep.
day loss of market capitalization ever.
For
That's
any
a
asset, right?
Yeah, that's a sign. That's a sign, folks. That would be a way to look at technical information and piece together your larger outlook for the markets where when shit like that's breaking down, you know something's up. You know money
Yeah.
is running. And if we put harmonics on top of Facebook, look, it's going to go do an 886 COVID
Yep.
retest.
What, 160s or something like that?
Yeah, 165. And you're
Yeah.
212
Yeah.
still. And
There's a open gap at 195. That's all. I think that's imminent. That's gonna happen, dude. Like you just broke below your high from July 2018. So there's no support until a gap fill again at 195-ish, which happens to be a high from February 2018. So yeah, this thing's done. And the great news is about Facebook, the distribution was confirmed already December 28th before it had the earnings report. You had a high in November and then a confirmation that there's distribution in late December. That was it for me. That was what a lot of altcoins were doing. That's like a lot of assets were making the double top after the buying climax in September. You sell off, you rally, lower high. You rally again, lower the same high. That's how you need to look at these things. When you get confirmation highs, you can't ignore them. Like Facebook was screaming it. And then what about like the other part of like the market that's so scary and there's something wrong, right? You just said, think about the earning reports that we've been having. 20% down 50 after hours, then up 57% after hours, then down 40% after hours. Multiple assets are doing it. That cannot be indicative of a healthy market.
Amazon did
All this
that.
after hour insanity, right? Volatility.
Check out Amazon on daily
Oh
chart.
God, dude. I can't even. I'm just,
Okay.
yeah, it's
And that did
uh-uh.
that. I agree with you, and that is it. That is indicative behavior. Now, harmonic perspective with Amazon, we have a massive crab pattern at 2800, the 1618 again off. You see this when we start bringing the patterns in. You see the consistent kind of occurrence that's going on individually where okay, October low to December high, now we're at the 1618 of that. We reacted, but that's only reaction. And that's typical reaction behavior. So Amazon comes up, nice reaction, but now what? We have to do the retest. If I was a super bull on Amazon, I would want to be buying it on the retest as the confirmation low for the type 2 reversal possibility. and we ran right into target one. We can't continue higher. We're rolling over. This will probably be one of
Go
the
on Facebook, right? Or
that's
Amazon?
right now Amazon. Okay, Facebook's just a grind. Am,
Yeah. Yeah, Amazon's still like safe till it falls below 29.20, right?
yeah, but you're
It's got
still
to go back test.
as strong as that was, and everything
Hmm.
they announced. You still have to come back and retest. That's only reaction level. This is not where I want to long. I want to look for
Yeah,
the
no, God, no. You're in the middle
retests.
of nowhere right now. Yeah, you would want to go test 28.77, but you know, there's an open gap until 27.86 down there. So, yeah, dude, definitely no action take on Amazon right now or long or anything. Just
No, and even in it, look,
bad,
that could
dude.
come down. And mark my words, okay? Amazon at 25.61. Why do I say that? Because there have been so many times where I see situations like this, big, fat, beautiful patterns, great stories, looks like it's going to go, that then the big opportunity really comes on that type 2 where you're here and you're thinking Amazon's great, yeah, great earnings report, whatever, but Harmonic Picture says no, that opportunity for your big moon has to come after the retest. So the return, it's very easy to get kind of twisted and think, oh yeah, this is going to explode. And we saw that in a couple of charts here. Gold is the one that comes to mind where it did the thrust, but we still knew it has to retest. And that's how I feel, even in the most optimistic of situations, these techs across the board have major patterns to retest, which tells you lower until that goes down. And then the bad ones, the ugly ones like Facebook or even Netflix, okay, which got,
Or Square or PayPal, God,
yeah,
or
Square.
Alibaba.
This is how those other
Dude,
ones
PayPal. Look at PayPal today. Jesus.
is getting.
Exceeding an 88% retrace
Let me
now.
look at PayPal.
Oh my God. It's
Oh,
down like
dude.
4%. This is like
This
capitulation, man. It broke the
no,
support like it was a joke at 120, 121.
and here's the other thing about all of these. This is now okay. This is starting to get like 2000. And why do?
Yeah, right?
Because you had so many IPOs that came out during those 90s, 95, 97, 98. And what happened was the
PayPal was one of them, right?
yeah, it was. Well, it came out. It was through eBay, got
Hmm.
taken into eBay, and then respun out. But they all have patterns like this, where like crypto, a lot of them they come out, they do a massive run, then they start their retracement. Well, tell me what's happening at the 382, all time major collapse. Tell me at the 618,
Big
another
gap
major
down, right?
collapse. The
Yeah.
PayPal, book it. PayPal going to $60.
Yeah,
60
or I mean, yeah, at
886.
least a minimum of 9. Yeah, the 886 from the lowest low ever, sure. But I mean, like, couldn't you say that the COVID crash low was the swing low to use here?
You could, but and that's something that's bothering
But look
me.
how it's being violated right now, like as we're speaking. Like, look how
Exactly. That's
it's
bothering
just
me.
it's just so nasty. Oh my God.
It
And what happened? Think about it like this. This thing's outperforming in the selling over the index funds by far, not even close. But what happens when the index funds roll over to these outperformers in the selling? Or how do you even say it? Is it an underperformer when you're selling off, or is it outperforming? Because it's like technically you're bearishly outperforming the index funds, right? But I guess you would say you're underperforming too,
you
because it's not selling. Okay, got it.
vastly underperforming, but
Yeah, there you
the
go. Yeah,
the
sure.
thing that we're seeing here is that the way that bear markets come together is you start shooting the sergeants and you start shooting the corporals and the sergeants, like those
Yeah.
stocks that were like the mid leaders, not the big ones but the mid leaders, they get annihilated, like your
Hmm.
theme stocks, like here's Peloton. Okay, and Peloton's
Yeah,
got
or
this
Zoom or something.
crazy Zoom,
Zoom
Peloton.
is just, yep, dude, look at Zoom, man. It's like it just made the lowest low since April of 2020 today, down
Wow.
5.3%. It's going for 106 for the 886 and a support resistance from 2019. Good God, man. Yeah, these things are just
So
screwed.
book them all for the 886 at 116 on Zoom. That was a 560 $560 stock. All-time 886 will come back. This happened in the Nasdaq crash in 2000. this is what you're going to see. And if you're not there on the 886, you just wait until you do, because you're going to retest. What you're seeing is the washout of the IPOs. So that all of these that came public in the last few years, especially off the COVID low, and again the cold, not COVID, cold vid. I like to call it cold vid. Cold vid
Hmm.
low is, I think, in most of these that have already progressed down are going to hit their 886s across the board, and so the market will drop until these individuals get to there. Square at $60, trading 105 at the moment. What's the other one was wasn't PayPal, was oh, here it is, Palantir, and they had earnings today. All right,
Oh God, did they?
all time 886,
ELTR, yeah.
but nothing there and collapsing
ELTR.
in dramatic
Oh
fashion.
God, yeah, what a joke! It hit the PCZ and then it's gapped. The triple bullish divergence at the 886. Yeah, 1146 is coming, probably lower, right? I mean, that's just miserable, dude.
88,
How do you use all that and then you still gap down 13%? Like what?
and
Yeah, that's just yeah, you're right though. It's like the first the sergeants and the captains they'll get taken out first, and then like eventually Apple and all the big boys, the generals, then get taken out, right?
yeah, and that's where I think the breakdowns of Amazon and Microsoft will take you out. You see, the likes, I've mentioned this before. Intel's been devastated off of its historic 886. I mean, its monthly 886 was devastated. Went back up multi-year highs, could not come back down. This is like here. This is Intel again. These
Oh
are
yeah,
the
man.
semis. Exact 886 was the high at around $67. Now you're back down. Your 886 swing on Intel just got hit last week around 47. Tell me what happens now, because if Intel, and this would seal the deal, and this is something to consider of what happened in the 2000 market. A stock like Intel breaks that low at 43, $44. I don't care whatever the demand is going to be on semiconductors before that can even be considered. You're going to have to go through this correction where you start doing BAMs, you start doing bat action magnet moves of, you've got your X, A, B at a 56, C point, and then you again come down to 886 at possibly $30. But that breakdown, once it happens, will trigger it. It will take months and months for that to be realized, but you're threatening that breakdown now, and you break it down, the rest will fall. So definitely
Yeah.
not what we've seen at all in a very long time, but it is reminiscent for anybody that was around trading the NASDAQ market in the 2000s. This is it. This is what you see.
Yeah, so look at DMG. You see Nike. This is like a perfect short setup, trade setup, right? Like you've just back tested the old resistance as resistance again, and you're starting to roll over, and you're showing like hidden bearish divergence really strongly on the daily. Like that's like a lot of downside for a gap fill at like 133, right? That's like perfect setup right there. And then the bank stocks too. Like I showed you, I posted Charles Schwab and Bank of America double topping, bearish divergence.
Yeah.
There's a lot of opportunities for shorts right now. I mean, there just are. You can't just fail to break support and then regard it as resistance and it not like roll over and go much lower. So I think Nike's a great area to buy a protected put or some sort of short, and then with a tight stop right above 148, 150, things going lower, man. It's a double topped, right? Nike double topped. August, first top, no one knows. Second top, November 8th. Everyone knows it's over, right? I mean,
This is where
gonna
you
go fill a gap.
you favor bearish patterns on hourly and 4-hour time frames. Nike had a beautiful bat at 146 and preceded with a butterfly. So real nice back-to-back situation. Nike, yeah, I mean I agree with that. A put, nice way to be playing that for, I would say, return move to the 138 level. That's those
Yeah.
things are nice because, again, when you get these bearish patterns in the downtrends, that's where the larger potential for the continuation move.
That's the only way a swing trader can make money in a bear market is shorting or buying puts because you trying to go long in a bearish markets, the patterns, if they even if they play out, they're going to underperform. They're not going to perform well. So it's just like you have to go for the trend, right? It's like if you're in the ocean or say there's the undertow, and I always try to say like when you're swing trading, you want to make sure you are swimming in the same direction as the undertow, right? If you're trying to swim the against the tide, you're going to lose, right? So to me, it's like duh, right? It's like a no-brainer. You don't fight the trend.
Yeah,
And you can just look, and if you don't want to do that, just flip the chart over. Just literally flip the chart and just just whatever. Then it'll make more sense, I guess.
all right. Nasdaq's right now at the we got a nice 5 minute butterfly at 14,285. But this is the thing you'll see. If fail here under 285, maybe we get a little reaction. This is what I'm going to look for. I'd probably get out of here in a couple minutes, but maybe a
Yeah,
reaction
it's
for
fun, man.
today.
It's fun, dude. I'm having a good time.
Yeah, no, I really appreciate you coming out today because I think we had to hit it out of the park. We got to recognize these things, and they haven't happened for a very long time. You have not seen rotation like this in at least, I would say, 5 years, four
Yeah.
years. Maybe the 2013 had a little bit of it, but we haven't seen rotation like this since 2008 financial crisis, and I really think it's we're going to have plenty of time to take advantage of these larger developments. If the strategy is going to shift to looking for a full retracement of the COVID low on the indices, which is we'll see it pretty soon. But again, this is the range on Nasdaq of think about that. It's not even was 2 years ago. The Nasdaq was trading at 6,800. So we're up 100 over 100% off of that low in less than 2 years. It'll be 2 years in March, in a month from now. That you can easily give that back. Easily give 50% of that back or more. I'll take it in chunks, but for now, I think everything that's lining up says full on return. Give me NASDAQ index down at 12.9, 12.8, and then we'll deal with larger possibilities because a bear market, I've been through two of them. They drag, we come to the markets every day and we trade and it's exciting and stuff. You're buying, mostly buying, especially in the last couple of years. I think most people play it that way. Well, when the bear market really drags and your long positions fail or they only give you brief
Hmm.
reactions over and over again and you're not on the short side, it's going to be a long year. So that's the thing I want people to shift their brain. You don't have to jump, we don't have to get crazy, but a larger breakdown that's obviously becoming, imminent will lead to, I think, bigger possibilities. For right now, just be aware of that stuff is shifting. And you look at stuff like Facebook, I think is poster child for that,
Hmm.
where, oh, Facebook, it's this, it's that. No, Facebook, look at that. There's a daily crab right now. But
Hmm.
the one thing about how does it enter into that zone? It just absolutely is like a knife dropping into the zone. You consider that kind of a thing. Facebook violates the hop at 207. There's not much there. And a liquidation like that tells me that that's permanent removal of investors. I mean, that's a permanent liquidation where people are not coming
Yeah,
back
they're
into
not
that
coming back.
anytime
No,
soon.
aggressive market rotation, right? And it's not going. Everyone knows they're not going cash. If they go cash, it's probably temporary. The money is running. Look, why is there what is it? 9-year highs on gold's volume today, right? People are taking their money out of these assets and putting it somewhere else. Platinum. Why did platinum break out on high volume and it break a crazy high all the way back from 2006 today? Like they're moving their capital. They're not going cash. I mean, some cash. and sitting sidelines, but they're also moving from one asset or many assets that are high flyers to others, and now we're going for the full reset. And they're not going to buy back till there's value perceived areas, right? 886s. Why did assets reverse so much at 886s? Because that smart money that dumped at the top waits until you see those full resets. So
Yeah, and Facebook. Look, you're more than halfway there, but it still is going to take more time, no doubt.
mhm.
Your 886 is basically, like I said, 165, but that's a process and that takes time. You might even get a couple of days where you get a nice rally, but I would be selling every one until we come back. And this is, you see it individually, you see it in big name stocks that led on the way up, and they will lead on the way down
Yeah.
before the indices do. And for harmonics, the way that we put the patterns, the ratios together, we can get a fairly clear idea of where it's going. And so if Facebook needs to do an 886 correction, which it is, then the market's still going to go lower. I mean, the market's not going to go up with Facebook grinding, hundreds of billions of dollars of more market cap off of its total. And that, for me, I've seen this many times. I would feel a lot better about the market if we were down here on the 886s and showing something, but you're not. So I think at this level, I'm going to leave it at that. I think this was a phenomenal conversation, probably our best ever. I appreciate
Sure,
your
yeah.
your time. And again, everybody, the thing to do is to get with harmonictrader.com if it's still crashed down, or go to Twitter. Get with Mitch Ray TA. He's on tonight on YouTube. And get with the software. So send a note to hpc at sr-analyst.com. Get with the software. Get with Mitch tonight. And again, I think we have, as ugly as it is, you have to raise your game now and anticipate these changes to survive it and to capitalize on it. It's going to be a lot more difficult environment this year than last year. So it's going to take a shift and change in thinking and markets to really profit, I feel. So for today, that's what I have. As always, folks, again, thanks, Mitch. As always, everybody, go get them. We'll be back on Monday for our next Harmonic Pattern podcast. Until then, everyone have a great weekend. And
Yeah,
we'll,
thanks for having me, man. And anytime you want to be on my stream, if you want to do it tonight, if you have time, by all means, I'd love to have you. I'm sure everyone else would too. But if not, whatever, it's up to you. And then we can schedule something for next week to follow up on this because I mean, do another Thursday, like next Thursday, same
let's
thing we
let
did today.
let's do that. I think next Thursday would be great for me. So you and I will talk. Let's chat this weekend, and then we'll plan something like next Thursday and get with your crew, get a couple beers. That would be great.
Yeah, sounds good, dude. Sounds good, Scott. Thanks again, man.
All right. Have a good one, Mitch. Take care.
All right, you too. Peace.
Thanks, everybody. What a session, really. We're going almost 3 hours, and I just can't thank everybody enough. Um, Definitely, you have any questions, get with us. Come on back on Monday, folks. And the other thing that before I go, I did want to let everybody know the Harmonic Pattern Collection update that is available. All right. So just run through. Everybody that's a trial or a new trial, send your email to HPC. I'm going to have to put it in the chat. And yeah, and that's for Brandon too. But HPC at sr-analyst.com. And my partner Chris is going to take care of you. He's the best programmer in the industry. And get with that. It's called the HPC combo. And you insert it, and that's there it is, the combo. I've got too many of these modules. But what it does is actually it puts all the patterns into one setting format where you can do everything. Before we had to input them. All right, so put those in regular, large, small, and even we need to collect ABCDs. So bang. That's the way to load it. I'll have more information about that this weekend. Gold members and HPC users, check your email. We sent out an update, and I will have a video on this major update and what it brings to everybody over the weekend, because there's enhanced scanner functionality. Really quick, you go to our watch list, and even our watch list we've got improved parameters on the watch list. So get with all of that, and if you haven't tried it, try it first. Don't subscribe. Please do not try the program and get set up first. And if you guys want to try it again, just submit the email. We'll take care of you. All right. But get with the software. Everything we do is based off these levels. That's what I have for today, folks. Again, as always, go get them. We'll be back on Monday.